Oh, sorry, guys. What is going on, investors? Hopefully you guys are doing well out there. I was just going through Apple's Q4 report and I fell asleep. At one time when Apple reported their earnings, it's still one of the largest companies, if not the largest, depending on what's happening with NVIDIA. But at one time, you would bust up these Apple results and you would dig through them and you would see explosive growth on the product side. You'd see explosive growth in China. You would see explosive growth across the entire financial statement. These days, when you open up the financials over at Apple, you're still very much impressed. I'm going to show you the things that you definitely need to be impressed here. But in some ways, has Apple become just one of the most boring companies? In fact, over the past year or so, we've seen multiple flops from the company. Their multi-tens of billions of dollar investment in trying to make an autonomous vehicle, that flopped. And we're seeing companies like Google and Tesla advance forward there. The company announced and released its Vision Pro. Has to be one of the dumbest and stupidest products that I've ever seen. I'm not saying that after the fact. Those of you that are fans of the channels know I was never a fan of the $4,000 ski goggles. The company has basically announced that they're going to stop manufacturing that product relatively soon. Meta taking the lead in terms of the device development when it comes to wearables on your face. So what is next for Apple? Will the tens of billions, hundreds of billions of dollars in buybacks that will likely continue, will that be enough to continue the type of performance that you had with the shares? Because if you continue to hold Apple, it actually continues to outperform. Over the past year, up 32% year to date, up 17%. Even over the past 6 months, you're up 32% on the iPhone maker. This is after the company announced their Q4 revenues. Those came in at $94.93 billion. That was just, and I say just, 6.1% growth year over year. Did beat expectations by about $510 million. When you start to look forward to the next quarter, questions remain. Can the company come over and above the $127 billion mark in that holiday shopping season, or will people balk at paying another $1,000 for a phone that's darn near the exact same as the last 5 or 6 models that the company has put out? We'll see. Although the subsidies that continue to be offered by the Verizons, the T-Mobiles, and the AT&Ts, those will likely keep the iPhones flying off the shelves. We do see some evidence, though, the company is not seeing enough upward pricing power. Look at your product sales over at Apple in the Q4. Again, this is a fiscal Q4, not an actual calendar Q4. $67.2 billion in revenue last year. That went up to, we'll just call that $70 billion. But do notice that the gains that you saw here on the product side, it's offset a little bit by the cost of sales. Part of this obviously has to do with inflation, wage inflation, part inflation, shipping the goods over here to America, depending if you're making these in China or India or wherever you're making these, inflation across the globe. You added, a little over $2 billion in product sales, but you added almost $2 billion or basically $2 billion to your cost of goods. So you really didn't actually squeeze out any additional profit despite the higher product sales. Where the company is absolutely humming right along is that service business. Look at this, $22.3 billion last year in revenue, up to nearly $25 billion. And here's the really cool thing is look at your services cost of sales. It's literally identical. All the CFO had to do was copy and paste the expenses of $6.485 billion last year, and we had the exact 6.485. So they have reached, they've already reached a tipping point with the services sales, but you're seeing that every additional dollar, or in this case, $1 billion of revenue is flowing all the way down to gross margin. So this has turned into a services business with a $70 billion run rate, even higher during holiday shopping seasons in terms of its product sales. So this is still a great business. I don't want you to make it seem like just because I was sleeping during the first 2 seconds of the video that we're not impressed here, okay? But again, this is like being impressed when LeBron James or Patrick Mahomes makes it back to an NBA championship or a Super Bowl. These guys are expected to do this. And in a lot of ways, we're expecting Apple to do this. The gross margins over the past year went from 40 billion up to close to 44. Again, most of that, almost all of that, has to do with the service revenue. Now, R&D, I've noticed, actually flattened out in the most recent quarter. Part of this has to do, I think they put the lid on the car. We were looking at Apple in subsequent earnings videos. they were adding like $1 billion to their R&D every quarter. And we were like, what the hell are they working on? Well, they were working on ski goggles, which didn't sell, and they were working on a car, which apparently is not being released. So there goes, tens of billions of dollars, unfortunately. $7.3 billion last year, up just fractionally. We'll call that about $7.8 billion. Your selling, general, and administrative also ticked up a little bit. So your operating expenses went up 13.5 up to 14.3. That gives us operating income in the most recent quarter coming in just south of 30 billion. Last year, it was just south of 70 billion. If you want to look at this on the past 12 months, since this is basically a fourth quarter for Apple, on the operating income side, you went from 114 up just a steady to 123. And I don't want to say like 123 billion. We're almost like saying this casually, but it's not. This is still really, really impressive. But again, this is like a star athlete doing exactly what you would expect them to do. Win MVP, go to a Super Bowl. If they're not doing anything over and above that, you tend to get a little numb to it. Now, the regions are very important over at this company. Greater China was able to hold up despite all the press releases that we've reported on our FangStock recap show with Huawei and some of the other domestic providers there. They're certainly chewing into the growth over at Apple, but I think some of the discounting that the company did, and we do see this kind of on the gross margins on this product side, I think some of the discounting that they did there helped maintain the sales basically down fractionally year over year, but basically flat. America's up, Europe's up nicely, Japan's up nicely, also rest of APAC also up. From the product side, you did have some growth in iPhone. Could be a gap on when the release was falling in the quarter, but overall you did see some increase there. Macintosh computers, just a steady business. iPad, which you had to refresh over the past year, I believe, ticked up nicely from about 6.4 billion up to closer to $7 billion. Where you saw a hit was the wearables division, down from 9.3 down to about 9 billion, only because I think there's only so much innovation the company can do with the earbuds and the speakers and stuff like that. It's basically the same product with maybe incremental changes over the past year. Now, it's still just an unbelievable business. They have tons of cash, and where I see some investors make a mistake is they report Apple's cash with just the cash and cash equivalents and these marketable securities. Typically, 99.999% of companies, this is where their cash is reported. But understand with Apple, they have a non-current asset down here of another $91 billion of marketable securities. My guess, I'm not a CFA, I'm not a CPA or anything like that, but my guess is these marketable securities are marked as non-current because they're pledged against the term debt, which is sitting at $85 billion. So this is more or less the collateral to this mountain of 85 billion. It's basically balanced off there. And so they earn interest on these marketable securities. That interest and principal then goes and pays the term debt. That would be my assumption of what's happening here. But just understand that Apple has current cash up here that they could use for acquisitions. They could use for many different types of things other than, and obviously spend on R&D and those types of things. But they still have these marketable securities down here. So don't be alarmed when you see this mountain of debt and it's balanced off by just this cash. You still have this cash right here, which again, most investors, when they tweet out the numbers or they look at this company, they often forget that. And I don't blame them because this is the only company that I've ever looked at that actually has that there. Now, from a cash flow perspective, we get a 12-month view over at Apple. Just $118 billion of operating cash flow. And they're not trying to do anything crazy over at Apple. Yes, they've burned some money releasing the Apple Vision Pro that doesn't sell and nobody wants. Yes, they wasted some money probably on the car project or whatever. But it's not a big deal because you look over the past year. Okay, Amazon and Google and Microsoft and Meta, they're spending tens of billions of dollars a quarter on purchase of property, plant, and equipment. Well, Apple spent under $10 billion. So you have this $118 billion. Yeah, you see this $48 billion. That's just purchases of marketable securities. They're just trying to earn some interest on this $118. So there's really nothing here. They didn't make an investment, really. I mean, there's nothing here. Okay, so what do they do with the $118 billion? Well, yeah, it'll put you to sleep, guys. They repurchased the stock. Look at this, guys. $95 billion. Folks, we would all be lucky to work at a company worth $95 billion. We'd be lucky to see companies that are worth 95, that generate $95 billion in revenue. Apple, for the full year, is buying back $95 billion worth of stock. That's like $8 billion a month in terms of how much stock they're buying. So you wonder why Apple stock, despite these relatively mundane results, maintains the type of performance. Well, when you're in there buying $8 billion a month of your own stock, well, of course, it's going to go up 90. It's still going to continue to go higher. As long as you meet expectations, with Apple very much comfortably does. Last year, they bought back about $77 billion. They continue to pay back a little bit of debt, and they continue to pay dividends as well. But remember, as you're buying back the stock, you're retiring the dividend that you have to pay on that stock. So there's kind of a twofold benefit. Now, the yield over at Apple is not anything impressive. In fact, it's like 0.5%, but just understand, when you do buy back the stock, now you're off the hook for that obligation of that 0.5% yield on those shares. Now, we come over here and look at this stock from a technical perspective. I mean, it really doesn't get any better than that. You've obviously got like a multi-decade trend. Even really since 2020, you are still making a beautiful series of kind of higher highs, higher lows. There's been some deviation back in 2022, but for the most part, here we are at the top of the range. I'll change it to a purple line, to a red line, because we're probably not stepping in there buy. But as we start to approach some of these green line, there's an area here at 209, which is kind of interesting. We're 222 in the after hours currently with Apple, further back to 200. And maybe next week, I don't know. I don't think anybody knows for sure, but let's maybe live in a fantasy world, and maybe the former president returns to the office and he is able to get a bunch of tariffs passed. Well, that could create an overhang on these companies that manufacture a lot of goods overseas, and that could create buying opportunities for Apple. I'm just looking at the next quarter, what could create a buying opportunity other than like a broad market sell-off, some other things. And look, Vice President Harris could get elected and say, instead of a corporate tax rate that Apple has to pay $14.8 billion worth of corporate taxes, well, it's going to be $28 billion, or it's going to be $20 billion. That would also shave some share price off of the broader markets, and certainly a net tax-paying company like Apple could shave some valuation. So just because Apple's at an all-time high, basically, and it's not super exciting, just keep on high alert, because we're moving into like literally next week, like 5 days from now, we've got one of the biggest events that we've probably seen over the past couple of years that could help drive stocks like Apple lower. Currently, the valuation on the stock is over 34 times. If we're just basing this on that valuation, I'd much rather have Google, which trades at a lower valuation. I'd rather have Amazon, which trades at slightly a lower valuation. When you look at the growth rate, it's kind of a high single digit, kind of mid single digit. Amazon is growing faster. Google is growing faster. I'd probably rather own Meta at these levels. Obviously, Nvidia, Microsoft, these stocks are kind of in their own stratosphere as well. Apple would be towards the back if I had to pick just one stock. Now, luckily, we don't have to do this. This is not like the date that you might go on later tonight. Unless you're like a massive player, you're probably not going on a date with more than one girl. But if I just had to choose one stock out of the group that we regularly cover here on the show, Apple wouldn't be high on the list. But as you pull back to 210, anything south of 210, it moves much further up the list. And look, this company probably will always have an ace up its sleeve. They've got plenty of cash, plenty of money, plenty of talent, and plenty of customers that eventually they'll come up with another winner. But it just hasn't materialized over the past several years, maybe even the last decade for this company. Hopefully you guys enjoyed today's video. Boy, I'm tired. Let's go trick-or-treating, and let's join you again tomorrow on Friday for the Fang Stock Recap Show. Look forward to seeing you all then. Good luck with your investments.